We might kick off with Brent dipping below $100 a barrel this morning, although it did in early trade dip below the big 100. It has bounced back, but is on a downward motion after last week closing down for the second week in a row. So we kick off the new week in that trend continuing. And so I'm not going to ask Omar about Liverpool being lucky to get a 2-2 draw yesterday, but we'll talk about that later. But Omar Najia, Global Head of Derivatives at BB Energy. Omar, oil now in that downward motion. Have we seen the highs? Is this the down that you have been calling for some time that you thought would come in the second quarter? Is this it?
Well, look, I mean, I think it's a very interesting question. Originally, I was thinking that this market would set this high and would go about correcting the move that we had since 2020, let's call it from about $10 to about 130 plus or minus, and we'd need to correct that rise. But I think still that the market has new highs to come. The question for me basically is from what level? So is it going to be, are the lows in recently on WTI like 93.50, or do we see a new low below that, maybe even towards 18 something, and then turn up? So my gut feeling tells me no, I don't want to be selling. I certainly don't want to be selling directionally, not because, it can't move $10 or $5, let's say, to the downside, but because, the world there's so much inflation, and I think the West needs to inflate. There's no other game. They have to inflate, and I think everybody knows that they have to inflate. And if they inflate, then the only way that commodities can go is higher. So I'm off the idea that we need to kind of, correct that, or look at it this way. I think maybe the correction would be done sooner rather than later. So I don't want to be a seller. There's too much inflation. They can't do anything about it. They're going to inflate more. So the West is going in one direction, which is inflate. Russia and China are going in the opposite direction, which is stable. In the case of Russia, linking the ruble to gold. So no, I don't want to be short. I don't want to be short oil. I'd rather look for an opportunity to be long it, basically.
Let's welcome Neil Atkinson, former head of Oil Markets Division at the International Energy Agency in Paris. Neil, your thoughts on the market outlook structurally now? It does seem like the demand destruction bears are overcoming the supply shortage bulls.
Well, I'm not sure we can be definitive about that just yet. You're right, there are fears of demand destruction because of high prices for consumers. There are fears of demand destruction because of the lockdowns in China. On the other hand, we're still, to some extent, floundering around trying to understand what the supply implications are of the Russia-Ukraine war. Now, we've got the IEA and OPEC putting out their monthly reports in the middle of this week. And a month ago, when they last did this exercise, attempts were made to try to understand what the shortfall from Russia in terms of oil and products exports would be by roughly April, May time. The shortfalls that were predicted at that time by the IEA of about 3 million barrels a day reduction from Russia were thought to be a little chunky in the time that's passed since. So we'll get some more indications this week. So we're still floundering around trying to understand the supply side of the Russia-Ukraine war and the demand side of high prices for consumers and for the China lockdown. We've got the Easter holiday coming up at the end of this week. We'll get some data when we get into next week in terms of mobility, how many people have been driving around in terms of discretionary driving. So that will give us a really good idea as to what the impact of higher consumer prices actually is. So yeah, I see where you're coming from, Sean, but I'm not entirely clear we can be definitive yet.
Orah Barryman, Managing Partner at Hormuz Straits Partnership. Bora, do you share Omar's view that that ultimately Jerome Powell is a dove? He's talking the talk, but he's not going to walk the walk on tackling inflation.
I can't say that I know the man. I can't say that I know his true.
Well, I do, and he's a dove. So hand the story.
Okay,
No,
exactly.
no,
but
okay.
if you
I
know
think
him,
he's a dove.
I think that the hawkish tone of the Fed clearly shows that they are sensitive to this notion of credibility and the chorus of criticism from respected names out there that uh, are saying that they've lost credibility and they've lost control of the narrative, and that and clearly that whole 2020 2021 mantra of transitory is has lost this effect to to hold the attention of the masses and the markets, and they want to reel in the perception that they will be satisfied with above target inflation. Now, what's interesting to me from reading the digest and some of the commentary is that 3% seems to be the new 2%, right? But we have a long way to go from today's levels of 7 to 8% inflation before we even reach those targets.
I suppose, in a way, Omar, your thoughts on that? I mean, that both could be right in the sense that the Fed and the central bank, we expect this week to see New Zealand, although obviously not a major leader in the world, but ultimately a signal of their intention to increase 50 basis points, the same with Canada. But ultimately, the idea that the Fed could increase rates until it achieves its objective of killing inflation, and that might be only up to 1 or 2% on rates, because that might be enough to turn the thing around.
And I don't think 1 or 2% is going to be enough to turn the thing around. We've got inflation at 7.5%. Everybody's going
Yeah,
nuts.
but if you look at the size of the debt levels, they're so large that suddenly 1 or 2% on your mortgage of 90% could be enough to keep you at home.
Yeah, so what do you believe? Do you believe basically that after COVID, Putin basically was sitting and had his nuts? So he basically said, you know what, I'm absolutely crazy today. I don't feel it. Let's invade Ukraine and change the world order. Or that's option A. Option B, he was sitting and he said, wow, you know, they have so much debt. Inflation is already running away from 12 years of printing money. So you know what? If I go into Ukraine and they want to sanction me, everything's going to go berserk to the upside. And you know what? Maybe I'll talk to China, and maybe we'll also kind of, you know, talk to the Venezuelans and the Iranians and the rest of the people that are whatever, and we'll give it a roll of the dice. At stake is the whole world, you know, who becomes head honcho. So either he's completely nuts, or there's a kind of plan in place. So at the end of the day, I mean, I don't want to make too much of a kind of, you know, a conspiracy theorist, whatever it is, but the Fed and the US and the West are trapped so badly, they can't do anything except inflate. They cannot. Their debt is too large. There's only one game in town, and it's been the game since 2008. Inflate, inflate, inflate. They produce nothing.
It's, if I want to interrupt there, you know, these Chinese are going to see the same thing. You can't be locking down your economy and your production and get away with mild and benign conditions. So we'll see how their zero COVID policy goes. It hasn't worked for anybody else, and now you know
but the Chinese will grow. They're going to grow at 7%. Europe and the US will not grow. And Europe and the US, with the money that they're putting in and with the money that China's putting in, China's growing. The West is not. The West has so much debt, they cannot grow. It's basically an economy that's based, I mean, look at the size of the US equity market compared to GDP. It's ridiculous. And I'm telling you that it's going to end very badly, and they don't know what to do. And nobody knows what to do because nobody's been in this position. The West doesn't manufacture anything. All the manufacturing is being pushed abroad. So all it is a financial kind of economy based on, you know, finance, selling more and getting a fraction and interest and all the rest of it. That's all gone. So once
go ahead. Finish your point, sorry.
Once commodity sellers, holders of commodities refuse, or basically not refuse, but say to them that, you know, paper's worth very little. Well, what's real wealth? Is it paper or is it commodities? And that's something that the West will learn. And they better learn quickly, otherwise it's all finished.
Well, I'll just bring in Neil on this point in China. I mean, China has a big sensitivity to inflation as well, where, you know, you see quite often one of the main pain points within the retail level in China is 50% of my income is spent on housing. And if 8 or 9 or 10% inflation, which we saw today on the PPI and CPI coming out of China, that's a problem for Chinese growth, Chinese demand. Neil, your thoughts?
Well, absolutely. I mean, it will hit Chinese people. Gosh, I mean, God, I feel so cheerful on Monday morning. I think I feel like going back to bed, frankly. But anyway.
You got some nice sunlight on your face there.
God, dear, oh dear. Lighten up. Yeah, I mean, this is hitting Chinese people in the pocket, clearly. I mean, as you say, a high proportion of income going on housing costs, no social security net, and all the rest of it, and people will pull in their we'll cut back and draw in their horns. Now, the inflation issue clearly is very, very serious. Omar's absolutely right. God, I'm old enough to remember when I was growing up in the 1970s when we dreamt that inflation would be as low as 7%. I mean, it seemed unattainable, which is not to minimize the risks that we're at now. And clearly, we are in a situation, let's just narrow it down to the commodities world, where the price of commodities is on a one-way ticket, which is essentially upwards, which has enormous implications for consumers. It has enormous implications for energy, and it has enormous implications for the energy transition as we try to move away from fossil fuels towards alternatives. And Omar's right. Yeah, the inflation picture is a very, very serious threat to economic stability and the ability.
But Omar is betting that they're not going to tackle it. I mean, that's quite a significant.
Well, what I was about to say was the ability of policymakers to actually tackle it, so far at least, seems to be pretty limited. And one wonders, you know, with elections in the United States this year, whether policymakers will actually have the courage to take some very, very tough decisions. Because
well, how about on your doorstep there, Neil, the French elections yesterday? Marine Le Pen is looking like a serious challenge now because, to a great extent, the cost of bread in France.
Well, you know, the Gilets jaunes phenomenon 3 years ago literally lapped at my door here in the 7th arrondissement. We had riots in the block that I live on. If you take the combined score for Le Pen, for Mélenchon, for Zemmour, you're getting close to 50% of the French electorate voted for people who, by some standards, are considered to be extreme left or extreme right. And that is a very, very serious issue. And the root cause of it is that the hard-pressed middle, lower middle section of the economy, and this applies to other Western economies, feel very, very hard-pressed by the cost of living, whether it's the cost of bread, as you suggested, which is rising, whether it's the cost of fuel, whether it's to heat their homes, whether it's to light their homes, whether it's to fuel their vehicles. It is hitting people in the pocket very hard. And we're seeing the implications of that politically here in France, and we'll see it elsewhere in Europe.
Orah, there's a very high profile article in the Financial Times over the weekend and in this morning's paper calling on all the big oil trading houses to abandon their positions in Russia. Your thoughts on that momentum that's been there the last month? Of course, we saw the oil majors sort of retreat quite early in this conflict, although they still will take time to extract themselves from Russia. But what are your thoughts on the potential pressure that could mount on the oil trading companies, who of course are locked into long-term agreements?
Absolutely, it's a big threat to their outlook, and there's no magic solution for anyone, whether it be the dilemma of the Fed and politicians around the world trying to live with inflation, or even these masters of the universe, oil traders in this new age of deglobalization. We don't know the roadmap forward, but I do want to say that we are living in a new age of deglobalization. It's been kicked off by these events: COVID, Brexit, and now this Ukraine war that Putin has kicked off, right? So, as Omar said, maybe he was going to double down and throw the dice, but it wasn't. It hasn't flipped in his favor. What it has kicked is off a lot of uncertainty, and but what I can say is the world needs those commodities that Russia has. The world needs those commodities, and the world will get those commodities. And because we're living in a world of deglobalization, there are a lot of serious arbitrages for someone to take advantage of to match supply and demand and the needs of the human race for energy and food supply.
Omar, your thoughts on the same question? I mean, this idea that as we move into the second quarter here, into the second month of this conflict and the pressure, obviously you're part of that same peer group, maybe not on the scale of Vitol and Trafigura and those, but nonetheless, do you think they will step back from that opportunity and legal responsibility that they have?
Yeah, I think they will. Absolutely, they will. And because this is the new kind of the West reminds me so much of how the Soviet Union used to be. So now it's all like groupthink. It's you had the ideas about woke and all this kind of stuff, and now the new enemy basically is Russia. So if you don't want to be, if you have to be anti-Russian, everything you say has to be anti-Russian. So yes, they will pull back. There's just too much to lose. Imagine going on the BBC now and saying, well, Russia has a point. I mean, you can't get there because if you try and do it on any social media, you're instantly banned. So of course they're going to do it. They're 100% going to do it. No, absolutely no doubt, zero doubt.
Who picks up that then? If they do, then who picks up the middleman role there? That's quite a significant amount of daily oil flow.
Yeah, so basically, Russia has said
besides BB Energy, of course. But
but seriously, Russia has said that you got to buy gas with rubles, right? People still don't understand, but the next thing will be oil with rubles. So basically, you got to go through somebody who has a ruble account in order to buy oil and gas. And what's going to be very interesting is that the Russians themselves will set the rate of it, not the rate of interest, but the rate of exchange between the ruble and the euro, or the ruble and the dollar. So they're going to be basically squeezing everybody in terms of energy, in terms of wheat, in terms of metals, in terms of everything. The ruble, who basically, we had Biden say that, it'll be 200 to the dollar or whatever it was, went to about 139. And last I looked at it on Friday, it was trading 71 to the dollar, right? And people just, because, we sanctioned from hell and destroyed the economy. And what's happened? Massive inflation coming back, the ruble getting stronger, and people are just confused. I mean, you tell them the obvious and they still don't want to buy it. You tell them basically that, Russia has moving global trade away from the dollar and the euro is going to implode catastrophically the US, catastrophically, and the same with the euro, catastrophically. And people just don't want to deal with it, so we'll just ignore it. So the Saudi is going to sell oil in yuan. The Russians and the Indians are trading in rupees and rubles. The Russians and the Iranians as well. So fewer and fewer. The Fed confiscated Russian reserves. They did the same to Afghanistan. They did the same to Venezuela. They took their gold. So everybody now realizes that if you hold dollars, it is not any kind of asset. It is basically something that will be taken away from you at any time. So what do you do if you're Saudi and you're sitting on short?
I want to say it will be taken away from you if you are in a state of war with allies of the United States. So, I mean,
Venezuela
clearly it's
wasn't
not
in
a
a state
threat
of
for
war.
most
Venezuela
countries
wasn't in a
view the
state of
dollar
war.
as the
Neither
cleanest
was
dirty
Iran.
shirt in the wardrobe. That is
Iran
the
was not in
fact.
a state of
It's
war.
not
Neither was
that the
Venezuela.
preference is to trade
They
in
took away
rubles.
their gold. No, but that's the whole point. If you have savings in somebody else's currency, then you give them the power
If you
to
make
decide
war
if
on
you.
that nation that
No,
holds
no,
that currency, then it will
no.
be trouble.
Russia's not at war with
Clearly,
the US. Russia's not at war with the US.
it is a major conflict that I have not seen any like of this, to grab another nation's territory.
What
Regime
about
change, that's another
Afghanistan?
matter. But to say
What
I'm
about
going to bite off
Afghanistan?
chunks of your own sovereign UN recognized territory, this is unprecedented,
But
and this
they did the
happens.
same.
Yeah,
They did
it's
the same with
natural.
Afghanistan, and they did the
Okay,
same with
okay.
Venezuela.
There's no
It's natural.
whataboutism. There's no whataboutism here. Everything is,
So
we go
would the
back to
move
the
away
Roman
from the dollar.
Empire. But let's think of more immediate sense of things in terms of this week. Let's get the survey question up and ask the room. Oil prices slid last week for the second straight week, and they're already down a chunk, and you know, good signs that they may close below 100 Brent today. My question is, will oil prices decline again this week, the third week in a row? Yes or no? Neil, you said not quite yet ready to flip to the bearish side from the point of view of the fundamentals. We've got this huge release from your former colleagues at the IEA, up to, I think it's between the IEA and the US together. Obviously, the US is part of the IEA, but it's 240 million barrels of strategic supply. The Chinese demand down 1 to 2 million barrels a day at the moment. What keeps the prices propped up other than a major escalation in the war?
Well, I mean, first, you need to make the distinction between announcing the availability of 240 million barrels to be released to the market, and the fact that, you know, how much of that will actually be taken. People are not obliged to take oil from the SPR when it's made available, and there is some debate out there as to whether that much is actually necessary for operational reasons. And indeed, there are also questions about the quality of the oil that is made available. As we all know, oil is not oil is not oil. And having said that, over time, there will be some release, and that will contribute towards maintaining supplies, offsetting whatever reduction over the long term we may see from Russia. In the meantime, obviously, the demand picture remains to be seen. So I think we are very much in a sort of holding pattern, up to $139, $149 a barrel, or whatever it was we saw when the Russians first invaded Ukraine. That was the initial knee-jerk response. You know, it's the end of the world. Prices could get to $150, $200 a barrel, $300 a barrel. We're now starting to see the dust settle to some extent. So I suspect that we may see prices ease further back this week, but we'll wait and see what the agencies tell us on Tuesday and Wednesday as to their latest assessments for demand and the latest assessment, crucially, of the likely impact as we move into April and May on actual levels of Russian exports. And that is going to be, I think, the key number to look for.
Orah, we already went into the Ukraine war with the World Bank in a revising downward outlook for world growth in 22. They came out with another report yesterday around Europe and obviously Ukraine, seen its economy collapse, Russia to be down close to 10%, GDP decline. There's a number of other revisions downward. I mean, with economic growth goes oil demand, right? At the end of the day, what keeps this oil price at $100 a barrel?
You're right. I think you know, we have to understand the situation, and it's so difficult to pick through these currents. And fundamentally, this inflationary dynamic that Omar has focused on is there, and it's affecting, as you said, the populism in the West. It was a major factor in Imran Khan's sort of departure from his role. Egypt is now seeing the highest inflation in 3 years, and China, as the digest indicated, is quite concerned about this, as well as all the developed economies. But energy is fundamental, so we need energy to go on with our daily affairs to make a living. Therefore, we have that countercurrent, as Omar rightly focused on, and I agree with. The world needs that Russian oil. The world needs the Middle East to produce, and we're not going to, we meaning the human race, not necessarily Europe and the US, but they're not going to cut themselves off from competitively priced product, because the economic growth is at risk, political stability is at risk, and we see a lot of difficult challenges to balance. Inflation is a factor, growth outlook is a factor, and meanwhile, how do we keep the show on the road? The US is saying that they're going to reel in this expansionary policy. If they really follow through with this and engineer a recession in the US, all bets are off.
Well, let's give Omar the last word this morning with the survey results coming in with will oil price decline again this week? 2 to 1 in this room at least thinks this trend line continues. Omar, how do you see the rest of the week?
No, I'd be voting no,
Okay.
simply because I think the way the market's declined, you had a sharp push up, a sharp push down, and then you've essentially been trading sideways, right? So time isn't on the side of bears. So if the market truly is bearish, it has to get a move on to the downside now. So basically, sharp move up, sharp move down, sideways. That to me is corrective. If that sideways then turns into very soon something, suddenly down, then yes. But the longer we trade sideways, the more I think it's going to go up. And what's going to drive these markets higher is the realization that, inflation is not only going to here to stay, but that, most commodities that I look at, for me, as opposed to for the company, from wheat to corn to sugar to soybeans to lean hogs to cattle, I think they all have further upside ahead. I think gold has further upside. I think platinum has further upside. So when I put all that to one side and I look at the way that they're looking, and I think technically they all have another leg higher, then that means inflation goes higher. And it means that, a lot of other stuff to do with it, which basically means that, what's going to happen to the dollar as a reserve currency is going to be very interesting. What's going to happen to crypto is going to be very interesting. What happens to equities? So imagine you want to win an election, right? So you increase interest rates, everything dumps. I mean, everything dumps completely. So you don't increase interest rates. Maybe you do more spending like they plan to do in the US with, these new bills, but basically driving inflation even higher. Now, the thing is, the equity market will rise with it. So your Amazon that you bought at 100 will go up 10%. So hey. But meanwhile, you'll be paying for stuff that you have, instead of 10%, 20%. So you'll still be losing, so to speak, but and the value of the dollar, of course, purchasing power will continue to go lower as it has for a very long time. And so I think that's the way the world's going to go. Higher inflation.
Higher inflation. Omar calling higher oil prices this week. We see that the previous low a month ago, after the initial war spike premium, prices dropped off quite dramatically down to around $98 on Brent, and then went back up again. We're interested to see if we test 98 again on this decline, whether that will be some kind of resistance or not, as it was in the middle of March. We need to wrap it up there, gentlemen. Thank you so much. Nice to kick off the week with obviously these subjects are vibrant and robust and ongoing. Omar Najid, always, thank you for anchoring Monday morning. Neil Atkinson in Paris, exciting 2 weeks ahead there where that election is going to go. If Marine Le Pen wins, my goodness, it could really be add momentum to that massive structural shift. Bora Barryman, thank you as always for joining us. Have a good day, everybody. We're here every morning, 10:30 UAE time. All the best.
All the best.
Thank you.
Thanks.
Thank you.
Thank you.